and lovely to have each and every one of you here. So starting with, let's have you tell us, please, what type of investment and funding stages and startups do you prefer to invest in?
Should I go ahead?
Yeah, please.
Okay, cool.
Let's have you.
Hi, everyone. My name is Ayobamigbe Teriba, but Ayo is fine. I work with Founders Factory Africa as a venture sourcing lead. What we do at Founders Factory Africa is we're a Pan-African investment fund. We are distinct because we are corporate-backed by 3 interesting corporates, and we invest across fintech, agri-tech, and health-tech. And crypto and the blockchain spin has been pretty much interesting to us. So as much as we've done some investments, we are also very keen on learning. That's why we're involved. Thank you.
All right, thank you very much for that. Yvonne, please, can we have you tell us some more about what you do at Untapped Global?
Yeah, happy to. Hi, everyone. So my name is Yvonne Okafor. I'm an investment officer at Untapped Global. And what we do at Untapped, we're more of a 2-part company, but focusing on the investment side. We do asset financing using a data-driven approach, and we call that model smart asset financing. Whereas we partner with companies and finance the initial assets or finance the initial cost of the assets that they need to run their business, get integrated into the data of those assets as a way for us to kind of monitor the business and to monitor the growth of the business and the operations of the asset. But then in addition, which is a very important part of our model, is that we get our returns and repayments through a revenue share. So the data integration that we're able to do and the smart part of our business helps us kind of be able to track the revenues to be able to calculate the share of the revenues that we'll get as a repayment. But then, like I explained earlier, to be able to kind of monitor the growth and the operations of the business. So far, we have partnered with 29 companies across Africa and Latin America. So that's 10 countries across 10 countries in Africa, 1 country in Latin America, which is Mexico. And when it comes to sectors, we consider ourselves sector agnostic, though the main sectors that we've invested in so far are mobility, e-mobility, payments, energy, water, healthcare, but we're also opportunistically looking at different sectors that could fit into our model as well. Thank you.
Oh, thank you very much for that. That's quite interesting, seeing a venture capital fund playing in the asset financing area. Please, let's have you, Jasiel. Tell us some more about what you do.
Hey, everybody, I'm just going to mute this. Hey, everybody, how you doing? My name is Jasiel, Martin-Odoom. I'm from Accion Venture Lab. I am the Africa Investment Officer for Accion Venture Lab. At Accion Venture Lab, we are a seed-first investor focusing on embedded finance solutions in emerging markets. So we invest primarily in Africa, Latin America, Southeast Asia, India, and parts of the US. I lead our business in Africa, North Africa. I have a colleague that covers Middle East and North Africa. In terms of what we care about, we really get excited about this idea of embedded finance and how companies are leveraging technology to bring financial access to those that are unbanked or underbanked on the continent. So a good example of a company that we invested in was Lami that was here earlier. We led their seed round and followed on into their seed extension. That's a pretty good idea of the kind of companies that we get excited about.
Oh, interesting. Thank you for that. Duncan, you're welcome. Thank you for joining us. Can we please have some insight about what you do at Unicorn Growth Capital? What types of investment do you do? Funding stages you are interested in, and the kind of startups you prefer to invest in?
Thank you so much, and apologies for being late. My name is Duncan Muchangi. I'm the principal at Unicorn Growth Capital. And Unicorn Growth Capital is a fintech and Web3 investor. And we like to focus on the growth stage. So we like to focus on companies that are between seed to Series A. These are companies that have already established some product market fit, some have a solid team, some revenue as well. And they're primarily looking for operational expertise to expand across multiple markets and grow their business. Now, we have a thesis, and we look at fintech very differently. We look at fintech and Web3 as a horizontal rather than a vertical. So we believe that every industry and every sector, every company at some point needs financial services, or at some point will become a Web3 company. So we like to focus as well on what we call like real-world use cases. So companies that are trying to solve problems for businesses, problems for consumers. Some of the companies that are within this conference are like Bitmama. These are companies that have solved a very obvious need today. For example, access to foreign currency. Trying to make use of trying to make use of crypto in our real world for payments, for example. Other companies include PhoneBank. These are companies that have used kind of everyday digital tools like airtime, which is already kind of like a tokenized asset, right? And they're trying to use that to help users to onboard into the Web3 world. So we are trying to find real use cases for Web3 and fintech, and also like use cases that can onboard the next billion users, especially to the Web3 world. So yeah, that's a little bit about us.
Yeah, thank you very much. I definitely will agree with you on that in terms of the Web3 growth that we'll be seeing in a few years. Even the big tech companies are all going Web3. Even companies like Twitter are already looking at how they can integrate some of those features into their system. And we'll see this probably in the next few years. So thank you very much. Yvonne, I think I'll go to you now. So in the last 2 years, we've experienced breakneck investment speed. Like some would say inflated valuations and a new wave of deals closing, all the time. Trust me, like next week, we have more deals closing all the time. So do you think we're not coming back to the basics?
This is a fun question. But I will also say it would be great to get the other panelists' opinions on this as well. Okay. I'll answer it in this way. I feel like a lot of local funds never really left the basics. I think it's just a lot of, let's say, foreign investors that maybe initially came in during that time where there was a lot of cash and they were kind of coming in to invest in companies. I think that, let me say it this way. Maybe they were initially getting into Africa and it was like, oh my God, there are a lot of companies doing things here. They hear pitches. Maybe due diligence wasn't done as tightly as it should have been, and that's where we saw some of those inflated valuations. But I think a lot of local fund managers and local investors never really left the basics to start with. I think one thing that you understand when you've lived on the continent for a while and you have been investing on the continent for a while is that you understand the need for traction, you understand the need to look at unit economics, you understand the need to look at how our revenues coming in and growth over time. I think coming back to the basics wouldn't be the term that I would use. I think we're now seeing people realize that there is a need to take the time to due diligence. I think the past two, especially 2 years, people got used to looking at a company and then deciding in 2 weeks if they're going to invest or not. And yes, conviction is very important when you want to make an investment, but you also need to do your research and make sure that, for not just for your sake as an investor, but also for the benefit of the company as well, that the money that you're putting in is the company in itself at the different stages is money that it can actually absorb at the stage that they're in. And it also will help them get from point A to point B based on the kind of business that they're in. So I guess to summarize what I'm saying is that I don't think a good number of us ever left the basics. I think people are just starting to understand that sometimes it does take time to do diligence and actually make the right decision in terms of making a good investment into the continent for the benefit of both the investors, but then also the benefit of the startup as well.
For me, when I think about the investment landscape and people begin to say like things like the market has corrected or whatnot, is I am again bullish and excited about the kind of founders that we've been able to build and breed in Africa, because over time you discover that the resilience has just shown just when COVID was going to come into the play, and then the kind of shocks that the market kind of took, and then COVID, happened, and everybody was like home, and people had to raise capital, people had to become dynamic to the situation, and just as kind of interesting funds were coming into Africa and having their different African perspective and also disbursement of capital, the African investors knew what was important based on the earning power of their people, based on the topographies of the regulation, based on the population of different markets, and also based on the fact that we're an emerging market and we are trying to pair ourselves with the right kind of emerging markets. So if there were checks or valuations that were top of the roof, I would say, again, for African investors, we've always believed on the right numbers we should use to value companies, the right kind of due diligence, the right kind of ways to pair apples with apples, and also become very true to that kind of school of thought. So for me, it's a lot more of African investors have always been kind of spot on the basics, and we've also been very helpful to other investors that have come into the country. So if some checks were misguided, I would say maybe because some African investors did not carry it along in those conversations, and some people went in blind. But our companies are still strongly respective.
Thank you very much for that. That was quite insightful. Thank you, Yvonne, as well. I would definitely agree, and that's why investment due diligence is definitely important. You know, this reveals all these inflated valuations and a couple of all these other things which would mislead investors probably. Coming over to you, Duncan, I was particularly interested when you mentioned some things about DeFi, which is a growing area and currently is disrupting the financial industry, right, and the traditional banking system. So where do you think we are presently headed in DeFi?
Yeah, we are living in very interesting times when it comes to decentralized finance or the entire Web3 world. So over the last decade, and maybe it's good to give you a bit of a context, over the last decade we've seen kind of a gradual, or not actually gradual, some of it has been exponential growth of various sectors within the blockchain or crypto space. Now, whatever you call Web3 now, decentralized finance is a key or fundamental sector. And primarily because if you think about blockchain, financial services is one of the most obvious use cases. So within the decentralized finance, initially we started to see development of exchanges, which is rather obvious because you will need exchanges to get onto these platforms. And then we started to see other use cases coming up, such as lending. We started to see asset management, as some of the services coming up. And of course, the most popular trading, people have been trading a lot, on these decentralized finance platforms. Now, initially, of course, we had exchanges that were centralized. Some of them now actually publicly listed companies. But what we are seeing now is the development or the growth of what we call decentralized exchanges. This is like, peer-to-peer exchange platforms. Now, that is growing quite a bit, and that's where we're heading towards. If you look at the volume coming out of the decentralized exchanges, it's growing exponentially. And finally, we are starting to see what we all imagined of the Web3 space or the blockchain space, where it's more decentralized rather than one company operating or controlling everything. Now, if you look at some of the volumes as well, they are coming a lot from the lending kind of use case, which is, credit fuels our economy. And so it's rather obvious that also lending within the Web3 space or the DeFi space is going to contribute to a very large volume. Beyond that, we have significant volume coming from what you call like bridge protocols, right? So the way you understand the blockchain, today everyone is trying to build their own protocol, their own chain, and kind of fuel a lot of users within that chain or that platform. Now, the future will be very interoperable, and this is my thesis, and it's already starting to play out. And whenever I find founders who are trying to struggle, scratching their heads over which protocol do they build on, who do they partner with, I tell them, look, the future is very interoperable, so figure out what best solves your problem today, because what we are starting to see again on the decentralized finance sector is the growth of bridge protocols, right? So these are the protocols that are helping you kind of move between chains. And that's what's going to happen in the future, right? You're going to be moving seamlessly between chains, and that's going to become, that's the volume from there is showing that this is going to become this is going to be mainstream, right? So we're also starting to see insurance as one of the sectors, one of the top sectors that is contributing to some volume. That being said, within the last, say, 2 quarters, it doesn't seem like everything I'm talking about now has been playing out because we have seen some significant market correction. Some of the blue chip tokens now have fallen more than 90% since their value last year around, say, this time. Yeah. And we've also seen some protocols lose more than 65% of their value, which is insane when you think about it. But the good thing about it, again, is I think that correction has shown the difference between centralized finance and decentralized finance. What I mean by this is we've not seen significant contagion happen, right? Or we've not seen bankruptcies being declared. So a lot of these protocols that have suffered within the last several quarters have maintained they've maintained their position. We've seen transparency continue. There's been some kind of orderly liquidation happening, and that kind of proves that decentralized finance actually can withstand even market corrections and moving forward. And I think the biggest problem has been, I don't want to go on and on, but the biggest problem has been poor use of tokenomics, right? We were very eager to incentivize everyone to come on board and use our protocols. We airdropped to everyone. There was a lot of things going on. There was also a lot of risk-taking, right? And so because of that, that's the reason we've seen the correction, but the future looks really, really bright. Those use cases I've mentioned are going to continue growing, and other real-world use cases that are needed and are going to solve real problems.
Thank you very much for that. I think it's quite interesting when you look at where the industry is currently headed in terms of DeFi. And what you mentioned, also about lending protocols and, credit and all of that being built up now on DeFi, that's quite interesting. You find that with this, blockchain is powering, a new wave of investment and use case for financial technology. Now, from there, let me bring this question to you, Jasiel. Africa has seen growth in liquidity and these credit issues, and some projects are actually trying to find means to solve that. And Duncan highlighted some of that. So, how do you think DeFi can solve these problems?
Hello.
Yeah.
Okay. Definitely better. How can DeFi solve this? Is a great question. One, I think we're still refining our thesis. We're definitely not as advanced as Unicorn Growth on their thesis on Web3, but I think a couple of things excite us about DeFi. One is, as we all know on the continent, the access to foreign currency is very limited. If you look at Emirates trying to repatriate 85 million from Nigeria and they couldn't get the money out, right? I think these things speak to the fact that access to liquidity, prohibitive capital control measures, all these things make it really hard for startups that are looking to raise foreign capital, especially in debt, right? Because what you're doing is if you get USD debt, but you're running a Naira business, last month it was 600 Naira, this month 700 Naira. If you're giving your money back to Untapped Global, they're going to be like, excuse me, where's our money, right? And I think DeFi solves some of that problem because it allows for platforms like Goldfinch is a good example to not only just get around some of these prohibitive capital control issues, but I think more importantly, even with the crash right now in the DeFi space, last time I checked, and I'm a couple weeks away, so I might be off, but I think there was about 50 billion still locked up in total value locked up on the blockchain. That is 50 billion real money that people are holding on to that can be leveraged and accessed to provide liquidity to a lot of startups, a lot of companies that are thinking through how to raise their capital. So for me, what I get excited about in the DeFi space is how we start to not only get access to foreign currency, but in a way that does not affect the real macroeconomic situations of how much dollars your central bank has to hold. Because the truth of the matter is the Bank of Ghana, Central Bank of Nigeria, Central Bank of Kenya, they need to have a certain amount of dollars on their books. So every time I send money outside of Ghana, there's dollars getting repatriated out of the economy. So I think DeFi helps us to avoid some of these situations because the fiscal store of dollars, the banks are not having to get away with. So if Emirates, for example, needed to repatriate 85 million, it is super easier, more convenient for them to go onto a platform in the DeFi space to get access to this locked up value that's just sitting there of people who are holding onto their Bitcoin, holding onto Ethereum, who are looking to make some interest on it, right? And that in that space, the Central Bank of Nigeria doesn't have to worry about the fact that you're taking 85 million real dollars from the economy, because that then kicks the exchange rate up. It makes life hard for everybody. So I think it's an interesting use case, but I am not also saying that we're there yet. I am saying that that's the potential that we see, the kind of use case that we get excited about, and I'm always intrigued by founders that are thinking around ways to solve it. Of course, we can't say this without speaking to the regulatory issues as well, right? It's like central banks are a bit more, I'm gonna be nice and say reticent around DeFi, right? They really not too sure how to play with it. So even as this is a real use case, I think we cannot try to move fast and break everything. You have to be able to work in tandem with some of these regulatory bodies, because at the end of the day, they still have a macroeconomic fiduciary, in quotes, responsibility to maintain the foreign currency reserves of the country, right? So it's an interesting conversation for sure, and I think some founders are building some really interesting stuff. Goldfinch has already done something really great in that space, and I think a few other founders, Crunch Network is one that's Africa-based that is thinking through some of that as well. So there are a few people that are doing this, and I think there's some value there for sure.
Thank you very much. That was quite insightful. Though still open and looking forward to having Accion Venture Labs, invest more in the Web3 space. I think you are more for fintech. And what other projects did you say?
Absolutely. So we're broadly in the embedded finance space. So I think the DeFi is definitely something that we're interested in. We actually just on Wednesday launched a new season of our podcast, Shameless Plug, but it's focused completely on Web3 this season. So our first episode on Wednesday was with the co-founder of Goldfinch. So it's definitely something that we're thinking through intently. I think for us, like many investors that aren't as advanced as unicorn growth, is that conversation around innovation versus regulation and where the opportunities lie. I think, but it's a conversation that like 10 years ago, mobile money was in the same space, right? And now I pay my electricity bill with mobile money. So there's precedent to how this works. It's just a matter of like us refining our thesis in that space, but it's definitely coming for sure.
All right. Thank you very much. Yvonne, I would like to know, I know you do more of asset financing. Would you be able to let us know, like, what kind of fintech and DeFi opportunities would actually interest you in terms of what you do? It would be good to know what kind of intersection that can have.
Yeah, I think I touched on it in an earlier session. I think something that I think we see as an opportunity, especially with the way we finance at Untapped, to be tokenization. I think because of our thinking through our portfolio and the fact that we have a good number of assets, being able to tokenize those assets or the revenue streams from those assets is an interesting approach. I think within taking into consideration the DeFi protocols that I believe we can play into. Again, not something we're actively doing right now, definitely something we're thinking about moving ahead. I think another thing that I personally have been curious about, especially when it comes to DeFi adaptation on the continent, would be more around, obviously, asset management as well. Just thinking about the different tools when it comes to buying and selling of digital assets. We definitely have seen a little bit of that with NFTs, but I'm also very curious to see how we can move away from just the art space or just the metaverse and see how we can use it for actual day-to-day use cases. I'm not gonna pick on specific things because I feel like there's still a lot of exploration and R&D to be done in that side. But I think that's another interesting side that would be great to explore and also adapt on the continent as well.
Oh, great. Thank you very mumuch. It will definitely be a pleasure seeing you play more in the DeFi and fintech space. I'm sure a lot of founders there will probably love to see you do that. And Duncan, I know you do a bit of DeFi investing, Web3 investing. So can you let us know what kind of fintech and DeFi opportunities would actually interest you that you would be bullish on in terms of investing in them? Right.
So we we are building kind of a platform or an ecosystem, so to speak. So whenever we look at companies, we try to find how they can best fit within our portfolio. So we are not a kind of pray and spray or spray and pray kind of investor. We're investing like about 100 portfolio companies. So we're only planning to have a very concentrated portfolio of about, say, 20 companies. Now, within those 20 companies, we're looking for specific use cases or specific sectors that they are trying to solve. Now, some of the most obvious, obviously, within, say, for example, credit or lending. Now, be it lending protocols, be it providing credit services to consumers or businesses, there will be a mix of all that. So there's definitely an aspect of lending that we are looking at, whether from fintech or Web3, and we're always looking for companies that they try to kind of merge, or they're at the intersection of traditional finance and decentralized finance. Right, so we like to say we want to find ourselves within the intersection of TradFi and DeFi. Why? Because the way we see the world, and I think I mentioned this in the morning, we will not get rid of the traditional financial structures that we have today. So the banks, the fintechs, mobile money, they will remain as they are and probably will evolve as we continue to develop these new technologies. So we're also looking for companies that are finding interesting ways to bridge that gap between traditional finance and decentralized finance. And I've come across very interesting companies within this conference that have done that. I've come across companies that have built their own very unique blockchain that solves very specific use case for their customers, right? So they initially started out just providing financial services for settlement among their, for their customers, but now they've built their own blockchain that solves the same problem. And with the blockchain, now they can do it faster. So we are trying to find companies that are using these technologies to increase their efficiency, right? Not just for the sake. There's a point where we all slap blockchain on everything, or Web3 on everything. So within the financial services space, we'll find asset management. We'll find within the trade and supply chain finance. But remember, at the end of the day, we want to find very unique intersection between traditional and decentralized finance.
Thank you very much. I really do appreciate that, quite insightful, because I believe everyone would definitely agree the functions and importance of traditional finance, cannot be eroded. And definitely it is important to find a balance between traditional finance and DeFi, Web3. So I think I would let this go to Ayobami. We're looking at, we have over $290 billion in the global VC vault. We have a lot of even investors in the blockchain space. We have big investors like Teriba, that's Cardano's investment arm, coming into Africa with over $100 million to invest in companies, right? These funds, where do you see them being deployed? Looking at the downturn of VC investments lately, and YC Combinator also issuing a warning, that in the coming days there will be an investment downturn and all of that. So where do you see the deployment of these funds, in the future? Where are we headed?
So when I think through it, the structure of African traditional systems, and also the structure of the evolution of our markets, our structures, payment protocols, and also the alternatives that Web3 bring into the mainstream. We are seeing the fact that, again, if there is a stockpile of dry powder, as we call it, the deployment is still going to solving dynamic challenges on the continent, which is that payments across borders is still a challenge. Also, again, authentication of different sorts, securities, also solidifying these decentralized systems. And most importantly, I think education. We are fortunate to be within the four walls of this summit and conference, having conversations about Web3, its evolution, its structures, its opportunities, and also how it kind of opens up Africa to the world. But where we see the kind of dry powder in VC is that, again, though the money remains there and you kind of find this stability or correction about investments, we would get to a point where the basics, like we've always mentioned, will become more universal. So it's like securities, reliability, scalability. The right structures that we still look for in VC will still be the structures that most of the Web3 investors will be looking at. But a lot more is, you're looking at a set of population that has grown through different kind of like curves. People have become more educated on how to use financial systems, mobile money and kind of M-Pesa that provides almost 90% of households in Kenya and access to financial inclusion, has already built a kind of rail that if investors are coming to invest in different kind of like protocols and channels, that actually makes it a bit more simpler. You're not going to educate them from 0 to 1, you're elevating them from 1 to 10 or from 1 to 100. So it's like the dry powder when it comes, and it's common. The problem here is, again, the very sexy things we just say are probably not the most sexy. Again, it's like, okay, it's fine. Give me your numbers. Tell me, like, show me where this deployment is going into, and now it's also going to scale the future of the African kind of population, and also the young but teeming and very exciting entrepreneurs we have on the continent. So for us is, again, education, building on the rails that currently exist, and also kind of working through the structures, which is something that we at Founders Factory are very, very much like spot on, helping our founders understand these are the things that lead to the growth you are looking to achieve. How do you stay focused, stay calm, and understand that if all this is there, wherever you want to be, whatever kind of company you want to be, do you want to get acquired, or do you want to write this to a unicorn, or do you want to write this to IPO? This and this and this are the metrics. Your traction, your users, your retention, your stickiness, all those things, even in the decentralized world, will still be the basics. So which is, even if we rejig or we look at the new evolution of like the structures, the basics will remain the basics, which is something we're excited and we're also happy to always engage entrepreneurs about. And for YC, yes, YC would give that comments because at the end, YC has a pool or an aggregation of investors they always portray their companies to at demo day. So it's to let you understand that, again, in the markets where we play, which is YC is a Silicon Valley-based accelerator, they don't have presence on the continent. So it's the wave, the rush, the kind of news bites they get there is what they will trickle down to the rest of the markets, which is, this is what we see, this is what we expect. Whatever market you are in, just get braced up for it. It's coming. But for what we see on the continent is our founders are resilient. Our founders understand the kind of continent and also the kind of people they build for. So I see us kind of riding the tide irrespective.
Thank you very much. I really would agree with that to a great extent. We'll still come back to you on YC's investment and what they're looking at presently. But Duncan, I don't know if you would like to share some of your opinion on this.
Yeah. So when it comes to the decentralized world or the decentralized finance, we have to look at what went wrong for us to see what are investors going to be trying to find different moving forward. And I think there was a bit of a lot of the companies they were relying on what we'd call unsustainable yield, right? So yield is, just to explain a bit more, it's basically how you're able to give a return to people who keep money into your protocol or put money into your platforms, right? So one of the incentives for you, obviously, to put money in a protocol or a platform is you can get a return on it. You can get a percentage of how much money you've saved over time. So there was a lot of reliance on what they call unsustainable yields. So what would happen was, one protocol would use its, funds to lend to another protocol. And so lending was primarily one of the main ways that these companies were able to, or these platforms were able to provide yields to their users. Now, unfortunately, when market corrects itself, such as what has happened now, you expose your users to default risk, And that's exactly what you've seen. The shake-up has caused people to lose value in their funds or whatever it is that they had stored in these platforms. So I think moving forward, investors are going to be looking to invest in companies that have more sustainable yield. And this is where we now start to talk about yield from real-world assets. So, the world we live in today is actually anchored on real-world assets. The hotel we are staying in today, they can go to a bank and get a loan because it's a building that exists here. And, this is something that has been around for 10 years and it's probably going to be around for another 50 years. Now, if I asked you for $100 or $1,000 to finance this hotel, that is something that you probably can take a bet on, right? So if you're talking about the decentralized world or the decentralized finance, we are starting to look at real-world assets. So are you using any form of real-world assets to generate yield? And if so, that is something that is more sustainable. So let me just give you a hypothetical example, not even hypothetical, I think it's definitely happening today. If you are going to finance a renewable energy project, like a dam, now the dams we know have probably existed for 50 to 70, 100 years. So that means if I put in my $100 there and they tell me I'll earn, $5 every year for the next 100 years, I think I can take a bet on that because I've seen it work before. So we are starting to see yield anchored on real-world assets. And so even as investors, we are looking for companies. You're not trying to sell vapor, like my friend Michael from Fund Bank likes to say. You're literally, selling something that can be, repeated and sustained over a long period of time. We hope that the frameworks, especially within the real-world assets, because there's still some limitations when it comes to the legal frameworks, because the title deed for this land is held by the government. And so unless the government allows for fractional ownership, you're not just going to do it. But we believe that there's opportunities that we can generate yield from real-world assets, and we're going to look for businesses that have, they're a bit more measured in how they promise their investors and promise users on returns.
Thank you very much. Quite insightful. I would come back to you now. You mentioned something about YC and YC Combinator and their investment style. You mentioned also that you do a bit of investing in agri-tech, and I would want some specifics, in terms of how it relates to maybe food tech, if you're looking heavily into food tech. But in the last two cohorts, YC Combinator inducted about 3 food tech startups and got them funded. So do you think we're having a shift towards that, kind of investing, and how do you see this playing out? It would be great to have your insight. Thank you.
So YC and the way they choose to spread out their investments is, again, as a result of the exposure and years they've built in just investing in different startups. If you remember, Paystack, which is a success story on the continent, is YC's first company. But what the Paystack built infrastructure for it to be able to accept payments easily. Over time, YC has been building just understanding the basics of the market they operate in, which is the US. The companies that they peer in Nigeria or invest in, lots of time, you see them have alliance of this for Africa. And then some people will probably put another kind of insinuation behind it. So for food tech, it's not a summer 2021 or summer 2022 kind of stuff. It's been common. YC has done deals in Vendees, in deals in companies that, again, sets the core infrastructure for some of these companies to succeed just there. And what YC does over time is, again, they take this to become like contextual knowledge, which is when they talk to these businesses, they come to their program, it's a kind of a peer-to-peer education. So these partners are also learning one or two things. And over time, they begin to find other businesses that can solve dynamic challenges that these infrastructure problems have solved and are going to build on it. So YC is doing deals in SendMe, which is like a protein business. What does it do? You use WhatsApp for you to be able to order for beef, and then you get it in the space of minutes. And then YC sees that to be like, okay, when we do these businesses, the next one will probably be logistics problems. And then they start doing businesses like A-Foods and also in like child tech. And then when this is solved, which is logistics, then they look at, again, food courts, which is a virtual kitchen, And so you should kind of see, and it's the way we also think about like setup of businesses in FFA, which is we begin to look at it from like an infrastructure problem. If we solve a lot of infrastructure problems on the continent, value add will be something we can always run with, and we can always begin to solve problems that are dynamic to our people. Because what do we have? We have infrastructure gaps, we have earning power gaps, we have disbursements of the immediate capital you have. I mean, an African, different numbers fly around, but a lot of time I try to contextualize myself in those numbers, which is like, how much do you want to spend on delivery? How much do you want to spend per meal? So it's not like WISE has shifted from like fintech to like food tech or agri-tech, but it's a lot more, they've used the years of like investing in different verticals to be able to now be the contextual knowledge that they can deploy across the like other opportunities that comes to them, which is something like, again, we also look at the fact that African challenges at different times might vary in different markets, but a lot of it is just solving the most important things to our people, which is access to finance, access to move money around, food, climate, energy problems, and also like what Web3 is solving, helping people to be entrepreneurial, helping people to be able to move money at better cost and more convenience, even though gas fees are expensive. A lot more is like with time, things will evolve, and we can be able to have African-based solutions to our problem, and we'll probably not want to rely more on like the Western countries to kind of fund the future of Africa, which again brings our power back to us.
Interesting takes. On that.
Question.
Okay. So there's this question which I would probably I would want everyone to touch on, but maybe we could have Jasiel and maybe Ayobami also talk, and probably Duncan too as well, which, like investment risk, generally are always there, especially in the fintech space, right? And they're looking at like bank non-performing loans, and much recently, Kuda banks are like financials, drawing from that, the financials that they released, where we saw them, incurring quite a loss in terms of non-performing loans, which was about 69% of about the $14.2 million of loss that they recorded. So what do you think like investors should be paying attention to, right? What kind of risks should they be looking out for? What should they be paying attention to generally? So let's have your take on that, please, Jasiel.
For sure. It's a great question, especially around the collections piece. I think that's, as we all, I don't know, I shouldn't say as we all know, but in Africa, there's quite a huge credit gap, right? Like 330 billion of credit financing just for SMEs alone. So there's a need for loans products, absolutely. I think as an investor for us, when we are looking at investing in credit solutions, what we do look at, however, is this idea of what is the behaviors on the ground, right? If you live in the States and you have a credit card, if you don't pay your credit card over time, your credit score goes down. Before you know it, you can't afford anything, right? Whereas if you don't pay your loan here, like if the person doesn't know your mom's house, like when are they going to come find you, right? And so for us, what we look at is how do you build solutions that are removing that, what's the word I'm looking for, discrepancy from collecting your servicing. So a company that we invested in South Africa called Kunda, they essentially provide liquidity for mobile money agents, but they have built a program that allows them to automatically take back their daily float that they offer to the mobile money agents directly from their wallets at the end of the day, without the agents having to transfer the money over. Not because we don't think that the agents are not trustworthy, but because we understand that it's a behavioral conversation that we're having here. So for us as investors, when we're looking at collection, we want to look at how do you make it such that your collections process is automated as much as possible, and you're able to take away that opportunity or access for that cash to go somewhere else. I think a really interesting use case in Nigeria is a company called Crop to Cash that is building this bank for farmers, and what they essentially are providing is they provide access to these farmers to get loans, to pay for inputs, pay for supplies, etc. But come harvest, when the off-takers pay them back, they don't pay them actual cash. They pay them onto Crop to Cash, so Crop to Cash then automatically can take out their debt service and leave you with the amount of money you have left, because they know, okay, we gave you 20,000 naira, you give us 20,000 naira, and maybe let's say 50. And so because of that, on your account, they can hold almost like a hold on your account of this amount, so that when you get paid 40,000, they take out their 2150 and they give you the rest of the money automatically. So that's how I like to see it. I want to caveat it by saying, not because we do not trust the African ecosystem, but we do think that if you're investing in an emerging market, you have to provide some of these guardrails, and a great way to do that is on an automatic collections basis.
Yeah, thank you very much. That was insightful, and a major concern is, though it's a game of numbers, sometimes it feels like a game of numbers, yes. But as an investor, rather than just looking at having a high valuation and exiting at a great rate, you should also be looking at things like traction and gaining revenue. At that point where you get your dividends coming in and you're looking nice. That allows you to hold like the shares for like a much longer term, not having to like dump it after a while. Ayobami, what's your take on this particular point we're treating here?
For me, I just think again, Kuda's release is a developing story. It's again just first quarter of a year reports that was again seen and also explained to people from the angle of the journalist that got the report. So again, the numbers are screaming, something needs to be done. But again, is when we build at like neck-breaking speed, multiple things would go wrong. So for me I believe that the business is still at a point where everything can be turned around to what excites us when you read a report. So it's for the fact that business dynamics are still business dynamics. Businesses are in business to make money, not to bleed money, irrespective of how we want to call it or how we want to make it look. But again, like I mentioned, that it's a developing story. Things will be done better. So that's all I can say.
All right. Thank you very much. Duncan, I see you have some points to share with us.
Yeah. My take on this is, look, the quality of your loan book starts at the process at the time of customer acquisition. Now, as someone who's built a loan book previously, now when you're acquiring your customers, of course, initially you get the really high quality customers who can pay back their loans, and that's fantastic. Unfortunately, or fortunately, due to growth or pressures for growth, you go out there and acquire other less quality customers. Now, at some point, we start to acquire what we call thin file clients. So these are clients or customers whom you don't have a lot of transaction history for. You really just want them on board, and you might lend to them. Now, at that point, you need to look at the quality of your loan book and decide, look, I am not going to take incredible risk at first. So with the thin file clients, what you start to do is you gradually increase their limits, for example, or you make sure that by the time you're actually exposing them to credit, they have qualified certain metrics, and there's multiple ways you can use to lend to thin file clients, especially in Africa. Because that's a lot of people don't have transaction history, they don't have bank accounts. They probably opened their first account with Kuda Bank. You know what I mean? So these are the kind of clients that you need to gradually lend to, and that will obviously make a better quality loan book at the end.
Yeah, thank you for that. Thank you for those recommendations. I'm sure the audience, we have people taking the cue from that already. So I think it would be a great time to have questions coming in. Though due to time constraints, we might have to probably just take maybe one question. Do we have anyone from the audience who has a question?
Okay, so my question is a very quick one. I mean, everywhere we hear you all are funding financial institutions, finance. What of companies, startups that are not in the finance sector? Is there a different, how would I say, investment board that looks at those ones? I just want to know what's the problem?
Ayobami, can you take that?
So again, the markets and for the economy to work is way bigger than finance. So for us at Founders Factory, we are focused on 3 main sectors: finance, health tech, and agri-tech. But what makes us very balanced is we take the same amount of companies per year from these 3 sectors. Again, the rules don't change. Like I mentioned, businesses are in business to make money, except it's a foundation. So for us, is the rules, the numbers, the traction, the market, everything is still what we scrutinize to make well-informed decisions. And so far technology backs the business to scale, we are happy to speak with those entrepreneurs and back them, because we believe across the multiple sectors, we have amazing founders that have just chosen to build against other challenges than to build just for finance. So yes, we take these opportunities and we're excited about them too.
Yes, thank you very much. I see investors see a lot of opportunities in the financial sector, apparently.
Yeah. Have you got any last words before we go?
Do you want to?
No, from you.
Okay, all right, myself. So definitely, from these, we definitely see a shift in the paradigm and a transition into Web3 investing. We see investors looking out for way more than just valuation and just numbers. They really want more value and traction and looking at focus on Africa. So we would be open to have our panelists also follow up and meet up with probably some of the people in the audience who might probably be looking to meet up and have you invest and probably give some insights to as well, because I understand you would definitely be giving advisory as well. That's part of the value that VC also give. So I think with this, we can wrap up the panel. And thank you so much for joining us and sharing your insights. It's been a wonderful time moderating with you. Thank you so much.
Amazing. Thank you so much. Can we have a round of applause?